Written by Paul Krugman, The New York Times, the US dollar. It's the bedrock of the global economy, a symbol of American might. But what if this mighty currency were to collapse? While it might seem unthinkable, the potential consequences are too enormous to ignore. A dollar collapse would send shockwaves across the world, impacting everything from global trade to the price of bread at your local store. The dollar's dominance isn't a given. It's built on trust in the US economy and its ability to pay its debts. If that trust erodes, the consequences could be catastrophic. Imagine a world where the dollar is no longer the world's reserve currency. Imagine hyperinflation, economic turmoil, and geopolitical instability on a scale never seen before. While it's impossible to predict the exact fallout, exploring the potential scenarios is crucial. Understanding the risks allows us to safeguard against them and prepare for a future where the global financial order may look drastically different. The stakes are high, and the time to consider the what-ifs is now. The immediate impact of a dollar collapse on the US economy would be nothing short of catastrophic. Hyperinflation would quickly set in, as the price of imported goods skyrockets. Everyday necessities like food, gas, and clothing would become unaffordable for many. Savings accounts, once a source of security, would be rendered worthless, decimated by runaway inflation. The stock market would plunge into a tailspin as investors panic. Businesses would struggle to operate as the cost of production soars, leading to mass layoffs and widespread unemployment. The government would face immense challenges, as its ability to provide social services and manage the crisis would be severely hampered by a devalued currency. The social fabric of the nation would be strained to its breaking point. Riots and civil unrest would likely erupt as people struggle to survive in an economy in freefall. Trust in institutions would plummet as the government grapples with an unprecedented crisis. The collapse of the dollar wouldn't be contained within US borders. It would trigger a global economic earthquake, sending tremors across the world. International trade, heavily reliant on the dollar, would grind to a halt. Countries holding vast reserves of US dollars would see their wealth evaporate overnight. This sudden loss of wealth would have a domino effect, pushing many economies into recession or even depression. Emerging markets already vulnerable would be hit particularly hard. Their currencies would likely collapse, exacerbating poverty and social unrest. The global financial system, built on a foundation of dollar-denominated debt, would teeter on the brink. For everyday Americans, the collapse of the dollar would mean a fundamental shift in how they live, work, and interact with the world. The value of their wages would plummet, making it difficult to afford even basic necessities. Many would be forced to take on multiple jobs just to make ends meet. Bartering and local currencies could emerge as people seek alternative ways to trade goods and services. The American dream, once characterized by upward mobility and prosperity, would feel like a distant memory. The social safety net, already strained, would be overwhelmed by the sheer scale of the crisis.